Welcome to Under the Umbrella, a series where we invite experts to share with us the key things a homeowner needs to know about buying or selling a property safely and securely, all right under the umbrella. So how does this show work? On our table, there are a few questions that our production team has prepared based on the top questions asked by our clients and viewers. These questions are wrapped up in the cocktail umbrellas. Our guests will select one umbrella at a time to open and answer the questions that are wrapped inside. Once they answer all the questions, they will be rewarded with a drink. So let's get started. Hi Kenneth, can you introduce yourself to our audience and what do you do?
Sure. First of all, thanks Rain for inviting me here today. My name is Kenneth from Keyquest Mortgage. We are actually a mortgage broker firm with more than 11 years of experience. We actually deal with residential, commercial, as well as industrial property loans. Basically, we help clients to shortlist the top 3 lowest mortgage interest rate, be it for your new purchase or refinancing.
Maybe you can share with us a little bit more, what do you love most about your job?
I think one of the things about my job is I love helping individuals to expand their property portfolio. So I love to structure for them to be able to get more than 2 or 3 properties. So we kind of plan and restructure their portfolio so to help the individuals owners to buy more properties and potentially use properties as a retirement tool. So I think over the years, I find it very interesting. I also learn a lot from agents like yourself and also customers. They actually share with me some tips. That's where I find that, in property market, it's not always about mortgage loan. Although we help them structure and helping them to expand their portfolio using our creative solution, we get to see a lot of interesting properties at home as well.
Exactly, I think we share many commonalities in the job that I do as well, yes. Helping people expand their portfolio.
Yeah, definitely.
Kenneth, this is an important one. What are the types of loans that a homeowner can take in Singapore when they are looking to buy a house?
Okay, so for home loan, there are a few kinds. So example, for HDB property, you can choose between a HDB loan or a bank loan. And there are also like bridging loan for customers who are selling back to back. They want to purchase first before they sell. They can opt for a bridging loan if their sales proceeds not in. They can use the bridging loan to bridge the gap. There are also equity term loan. That means existing homeowners who already have a prior property and they like to take out some equity from the existing property, that would be considered equity term loan or like a term called cash out. Lastly, there are construction loans. These are mostly for landed homeowners whereby they want to do an A&A or they want to rebuild. They need some additional fund for the construction loan phase. In terms of interest rate, it will be break down into a few segments. So for banks wise, they have actually quite a few kind of rates. There's fixed deposit rate, there's bank spot rate, there's Cyborg, now the new interest rate benchmark Sora, as well as fixed. So these are the interest rate that customers can choose from as well.
Oh, that's really important information. Now on the topic of HDB, so this question is asking whether getting a HDB loan seems to be a much better option compared to a bank loan.
Okay, first of all, for HDB loan, there's a benefit because why? The down payment for the 10% can be all from the customer's CPF. So technically, they don't need to come up with any cash. And another benefit about HDB loan that is you can actually loan up to 90%. So this is some benefit when you are getting a HDB loan. But for HDB loan, interest rate is slightly higher, it's about 2.6. Whereas now banks loans are ranging from maybe about 1% onwards. So we do see some clients that they go for HDB loan first because they want minimum cash down payments and they want a higher loan, after which they actually do a refinance to a bank loan. And for bank loan wise, the LTV is different. For HDB is 90, but for bank wise it's up to 75%. And for the down payment wise, minimum the requirement sum for cash down payment is 5, the balance 20% can be CPF. So that's the main difference between HDB and bank loan as well. So HDB you can go for 10% from CPF, whereas a bank loan requires a minimum of 5% cash down payment, 20% from CPF.
But generally, who can take the HDB loan?
Generally, if you're buying your first HDB property or resale HDB property, you can actually opt for bank loan. So generally, homeowners can opt for HDB loans.
So how about Singaporeans and PR? Does it make a difference?
For both Singaporeans and PR are eligible for HDB loans.
Okay. Okay, I think this one will interest a lot of people, even myself. Are there any fees when it comes to applying for a bank loan?
Okay, so for when you're applying for a bank loan, usually there are a few things you need to take note. Number one, that would be a valuation fee. Is a one-time fee upfront. So for valuation, if it's a HDB property, HDB will be actually doing the valuation. So you need to submit up the request to HDB. But if it's a private property, the valuation will be done by the banks. So usually that will only happen after client has signed on the letter offer. So that would be for valuation. Fire insurance will be also compulsory. So if you are getting from HDB, you need to purchase a fire insurance with HDB. Same goes for banks. If you're getting a loan from the banks, you need to get a fire insurance from the banks. Last fee will be lawyer fee. So be it if you purchase a HDB, getting a HDB loan or a bank loan, both you are required to get a convincing law firm.
Can you also share with us a little bit, maybe what's the approximation of the kind of fees we're looking at for valuation?
Okay, valuation, I would say is within a range of 100 to 300 bucks, depending on whether is it a HDB loan or a bank loan. So this is a range we can use as a guideline.
Okay, this is very important for, I think, Singaporeans and PR when they are taking bank loans. Can you share with us a little bit more whether we can use CPF to pay up our bank loans?
Yes, definitely. So the CPF usage will be on the down payment. If it's HDB loan, you can use 10% of your CPF. For private, it's 20%. And subsequently, when you're paying the monthly installment, you can actually fully utilize via your CPF as well, if let's say your CPF OA has the sufficient amount to fully cover the monthly installment every month.
I understand you can only use it from our OA account, is that true?
Yes, that's right. You can only use whatever is in your OA account to service the mortgage loan.
How about if my client is actually taking a second home loan?
Okay, if they are taking a second home loan and they wish to use CPF, usually they need to meet the CPF minimum retirement sum before they can use CPF on the second property. So different age group has a different CPF retirement sum. So usually what we advise clients is that we do a cross-check with CPF based on their age group, what is the minimum retirement sum. They don't need the full amount, but they need half of the retirement sum.
And I believe it changes every year, am I right?
Yes, it kind of gradually increases as time goes by.
Okay, so Kenneth, there are so many different banks and so many different packages available in the market for the clients, right? So when I'm choosing, what do you think are some of the tips and some of the things that someone should look out for when they are comparing?
Okay, so the bank's interest rate actually changes every week or every 2 weeks or even every 3 weeks. Sometimes certain banks will have certain kind of promotion package within a week. So if you manage to be in this window, then you probably can enjoy a low rates compared to what is offered in the market. So in terms of interest rate, like what we shared earlier on, there's different kind of rates. It depends on individual customer risk appetite. Some clients, they are more risk averse, then they can actually consider for a floating, like Sora, Cyborg, fixed deposit rate or bank spot rate. But if a client is more conserved, I would say that they can go for fixed rate, which is very stable. It does not fluctuate with market going up or down. So this is some of the things the clients need to be aware, because a couple of years ago, a lot of customers has this impression fixed deposit rate is actually a fixed rate. It's actually not. Fixed deposit rate is still subject to market fluctuation.
So nowadays, I hear all the Sora, SOR. Maybe you can share with us a little bit what does Sora and SOR stand for?
Okay, so Sora will be the new interest rate benchmark, which will be replacing Cyborg moving forward. So what is going to happen is that most banks are doing a transition now. They are removing Cyborg from their package list. Some of the banks are really going to phase out. That means if the existing customer is already on Cyborg, they're going to phase out within the next 2 to 3 years down the road. So that's one of the things that's going on for Cyborg versus Sora. So for Sora will be the new interest rate benchmark all the banks will be using. So the main difference between these two is that Sora will be a backward looking interest rate. What do I mean by backward looking? It's actually saying that they will average out the last 30, 60 or 90 days. Okay, whereas the Cyborg is a forward looking interest rate. So example, if today US Fed announced that they are going to increase interest rate, we can see Cyborg straight rate goes up and your interest rate will be affected immediately. Whereas for Sora, it's more regulated by MAS. So I would think that it will be more stable compared to Cyborg. The fluctuation would not be as fast compared to Cyborg packages.
Okay, I think this one is very important to agents like myself and my fellow colleagues.
Okay.
What are some of the common mistakes you have seen homeowners make when they are applying for a home loan?
So one of the common mistakes we see is that maybe the homeowners do not apply for IPA first. Okay, so basically they just went to see the property they like, they just give down a check for the unit they like, after which, after doing up the bank loan, then we realize that they can't qualify for the full 75%. So we do see such customers before, and in the end they might have to forfeit their purchase. So what we recommend in market is that it's better to get a proof in principle done before they give down the check, so it's more secure. They know that at least there's 1 to 2 banks able to back them up with the loan amount they are looking at.
Definitely. Usually for myself, I will refer my clients to you first, so you can help me qualify them before
Yes.
I bring them shopping.
Yes. So what we do differently is, because sometimes it's like client have not done anything. So what we do for some of the client on the spot is that we do a verbal indicative over the phone. Okay, to pre-qualify them, like to give them a guide roughly how much they can loan, follow through by a proof in principle from the banks.
So usually the approval in principle by the banks takes about how long?
Depend. I would say it range from a day to 3 working days, depending on which bank we are looking at, and also whether there's any complexity of the case. If the client do not have lots of commitments, they do not have car loans, all this, if they do not have any credit cards liability, usually turnaround time is about 1 to 2 days to get a proof in principle from them.
Understand. This step, I think, I agree with you, is extremely crucial in the buying process.
Yes, yes. Because of the TDSR which was introduced after 2013, there are still a small portion of homeowners which is not familiar. They thought that it was still very easy process, like before 2013, you just need to maybe show the bank some basic information and you can qualify for a loan, which is after 2013, because of TDSR introduction, a lot of homeowners have a tough time getting a mortgage loan because they might not fulfill the criteria.
Okay, so this question is for those who actually already have an existing home loan. So are there different ways whereby they can try to reduce their monthly installment?
Yes, of course, because what we do over here is that we also do a planning process, because some clients might think that, oh, because at the age of, example, 40 years old, they can only qualify up to 25 years loan tenor if they are going for more than 55% loan. Therefore, some customer might find that, oh, my monthly installment might be a bit high. Is there any way to reduce? So because for purchase criteria is up to age 65, a lot of consumers does not know that actually for refinancing, we can go up to age 75 years old. So technically, after 1 or 2 years of the lock-in period, they can do a refinance and stretch to age 75. That actually reduces the monthly installment, number 1. And most banks on the 3rd year interest rate is slightly higher. So when they refinance from bank A to bank B, right, they actually save in terms of the interest rate, comparing if they stay put with the existing bank to pay on the 3rd and 4th year interest rate as well.
That seems to be a very good option, especially during this low interest rate environment, don't you?
Yes, definitely. So over the past 2 years, because of COVID, we actually help a lot of homeowners to save some money and reducing the monthly commitment by doing a refinancing. Yeah, so this is one of the tips I think is very important, because it helps to, you can stretch your loan tenor longer, that reduce your monthly installment, and reducing your principal amount as well as the interest rate you're paying with the current banks, and getting a lower interest rate for the new banks.
So Kenneth, if my client is looking to actually sell their current property, how would you advise for them to handle their current mortgage loan as well as their next one?
Okay, so first of all, if they are planning to sell within maybe 6 months or 1 year, or within the next 2 years. So number 1 questions I always get from my clients is that should they refinance? So the answer is yes, they still can do a refinance to save on the interest while they are in the process of selling. But what do they need to take note is that they need to get a package whereby they have sales of waiver. That means in the event if they sell within the next 24 months, the banks will actually waive on the penalty fee. Another thing to take note is that if they have car loans and they spend a lot on credit cards, so during the process when they're applying for loan 3 months beforehand, try to minimize on the usage on the credit card. That means don't purchase on a big ticket item. If they really need to purchase on a big ticket item, make an advance payment, okay, when they are spending on, like maybe they are getting a down payment for a luxury item, maybe worth 10 to 20k. So they can actually pay in advance to the credit card, so that when we are doing a credit bureau check, this will not affect their mortgage loan. And also, in terms of credit card payment, must be prompt, so they need to pay on time, because if you're late by a day or 30 days, that will actually also affect how the banks look at you in terms of repayment ability. And also, sometimes when they are doing back-to-back, that's where we need to help them to manage the timeline in terms of bridging loan. Okay, so based on the time they want to buy and when they want to sell, maybe they want to transit in the sense that they want to purchase first before they sell, so they have sometimes renovate the new place before they shift in. Then that's where we can plan a bridging loan for them as well. Also, lastly is that penalty fee if they are already in process wanting to sell. So sometimes as a consumer, they are not aware that whether they are still within the lock-in period. They can always check with their banks when they're out lock-in, because if it's just 1 or 2 months away, then in terms of timeline of the selling completion can be better managed in terms of pushing back a bit, so that they don't incur the penalty fee of 1.5% during lock-in period.
Yeah, that's really important information for them not to incur extra costs.
Yes, definitely. Yeah.
Maybe Kenneth, one more question. Maybe you can tell us a little bit about what's the difference going to you to secure a mortgage loan versus going directly to a banker?
This is one of the very common questions we get most of the time from customers as well. So a lot of customers think that, oh, when I engage a third party, a mortgage broker, do I need to pay them a fee, or do I get a high interest rate? Actually, it's the opposite. When a client engages a mortgage broker like us, Keyquest Mortgage, they do not need to pay us a single fee when we are helping them to do the mortgage loan. But on top of that, we manage to get them a lower interest rate comparing them going to the banks direct. Because sometimes different banks have different promotion at different times. They always prefer to use their main bank, example Bank A, but sometimes Bank A might not have the best interest rate at that point of time. So if they open up, we can have Bank C, D, E for options, which might be lower than the Bank A. And because we give bulk volume of businesses to the banks, so we know what is the threshold the bank can go lowest based on their loan amount. So it actually saves customers a lot of time, that instead of them talking to their own bankers, finding, okay, this is the rates they can get. But sometimes we actually manage to get something lower for them if they actually go through us. So this is one of the benefits, and the misconception a lot of customers have that, oh, engaging broker, you have this fee, charges, interest rate high. It's actually not. You actually save a lot more.
Yeah, I think this comparison is actually quite important for them to maximize their savings.
Yes, definitely. What is important nowadays is that for Rain, when they engage us, when we are going through for their clients planning. So like recently you have one client which you refer to us, they actually went to apply with the banks directly. They thought that they could handle the mortgage loan themselves, but in the end what happened is that the banks couldn't grant them the loan amount they want. When Rain get to know of it, they actually quickly give us a heads up and say that, hey, Kenneth, can you look into this? So we kind of quickly, because the client has already purchased, so we actually within a day we actually work out and find out what was the challenge the client was facing, and we come up with a solution, and the client actually managed to get the mortgage loans sorted out. So for Rain, when they have a partners like a mortgage broker, they can actually solve a lot of customer problems as well, because Rain doesn't just assist the client in terms of buying, selling. They also make sure that their client is well taken care. They have a partner whereby in needs we can come in to quickly rectify anything that will obstruct in terms of helping the client to get a mortgage loan. So I think that is very useful when you engage Rain, and they have all the necessary support in the event that if you meet obstacles, there's someone there that she has will be able to solve your needs.
Yeah, definitely. Mortgage specialists are definitely one of the very important stakeholders that agents like myself need to work closely with in order to protect all my clients' property purchase and even the selling.
Yeah.
Thank you for coming on board with us today, Kenneth.
Thank you, Rain, for inviting me for today's session as well. I hope your audience will find today's session useful. Just like to add a bit more. Personally, when I work with Rain, I find that she's very detailed and she planned ahead of time. So every time when I work with her on her existing customers or new customers, she ran the extra mile and planned the small little details in advance to make sure that the client is well covered in all areas. So I think this is one of Rain's unique character, which I think is something special about Rain.
So thank you, Kenneth. Let's have a drink.
Okay.
Cheers.
Cheers.